guys and girls, it's Nathan Birch here from B.Invested.com.au, and today I'm answering questions from our Facebook community. If you want to be a part of the community, you know what you've got to do, go to the link below. Today I've got a question from Justin, and Justin has asked me, Nathan, is your whole brand built along lower social economic areas like Western Sydney, and what do you think of diversification strategies? Good question. I'll answer that in basic. No, I invest in all different things. I've got anywhere from shops, I've got houses now, I've got units, I've got penthouse units, I've got waterfront properties, I've got houses in Western Sydney, I've got houses in regional areas. And I guess the big thing with, if we look at every property that I've purchased and the characteristics of them, is that they all make money. And I treat my property investing like a business. Every business goes into business to make money, and if they don't, they're unsustainable and they fall and close. And for me as a property investor, I want to be a successful property investor. I've got to make sure that all the numbers stack up and my properties are making me money. So if we go back and look at my whole portfolio, I'd never been to Mount Druitt before 2002. I got my first job out there just for the fun of it. I wanted to see what the area was like because I wanted to buy properties. And that was an area that was cheap, but it was in a half-hour driving distance to where I lived. And for me, I'll be forever grateful of Western Sydney and those areas, because I made my first $1 million at the age of 21 in Mount Druitt and the surrounding suburbs to that. And the reason being is that the properties that I bought were fundamentally strong. They were bought below market value. They had a low entry price, so I could buy more of them. And they had a strong cash flow to be able to support themselves, and they had upside for growth. So if you look at the buying below market value, if you buy 50 grand below market value on a $200,000 property, that's 25% below market value. If you buy $50,000 on a $500,000 property, it's only 10% below market value. There is a big difference there. If you look at the cash flow, I'm getting 8 to 10% yields in Western Sydney, buying stuff off the shelf, as far as buying a unit, a house, townhouse, villa, whatever the case may be. I'm getting strong rental returns, so the property doesn't eat into my lifestyle. That's from day one. Over time, the rents have gone up, and they have been able to produce a positive cash flow for me, and it's been able to support my lifestyle. If we look at capital growth, people said to me when I first started buying properties out in Western Sydney that I'd go broke, I'd lose money, all those sorts of things, because it's just a stigma attached to you should buy in a blue chip area. For those properties, there's been heaps of infrastructure installed over the years that I've known it over the last 10 years. And it's been stuff like the M2, the business parks, all those sorts of, M7, sorry, the business parks, and all the infrastructure. And there is a big social change at the moment happening out there. And from that, I expect that to continue, and I've seen some massive growth and massive outcomes from that. Like having my first $1 million at the age of 21, who would have thought me, Mr. Simple Kid, could have been able to do that? And it's all dependent on your strategy. If I was to look back at my portfolio, those properties that I've purchased out Western Sydney, southwestern Sydney, they would have played a big key part of my foundation portfolio. And if you watch other videos that I've put up on YouTube, you'll learn a bit more about what a foundation portfolio is. But the foundation portfolio, if I didn't have that in place, I wouldn't have been able to have equity, a net worth position to be able to go and purchase other bigger properties and chunkier properties like penthouse units that are brand new, off administrators, shops where I can put in big, large, bulky retail food chains into them, and different things like that. So it's important of how you view your property portfolio in perspective. I see a lot of spruikers out there selling stuff as far as mining towns, diversification, buying things off the plan, all that sort of stuff. You've got to be very sceptical of everything you see. It has to work in line with your goals. So whatever your goals are as a property investor, I'll leave it with a question to ask yourself, and feel free to pop your comments in the box below on YouTube. What is your goals as a property investor, and how are you treating your investing like a business? Are you just buying properties because you want to have a property here, property there, or are you buying properties because you want to get yourself a 50 grand positive cash flow, or you're buying properties because you want to have a $5 million net worth? And the question I ask you is, what are you doing to get there, and how are you treating your property investing as a business? So Thanks a lot for the question today, Justin, and thanks for watching it and having me in your home.